Will the market go up or down? Should you lock in or float? Find out this and more with Master of the Markets, hosted by Barry Habib of MBS Highway. Brought to you by Paramount Residential Mortgage Group.
In today's mortgage environment, providing our wholesale community with the best combination of product, pricing, technology, and service is paramount to their success. PRMG, built by originators for originators.
Welcome to another edition of Master of the Markets. I'm Barry Habib at MBS Highway, created exclusively for Mortgage News Network and brought to you by PRMG. They're working for your best interest. It's a different world, isn't it? I can't imagine how you must be feeling because things are changing so quickly. So it's not an easy time. It's certainly not an easy time for you and your families and the concerns that you have. But I'd like to try and break down some of the business things and some of the questions that you might be seeing. So first of all, this week, as far as news goes, there will be some housing data. We did get some economic data last week. It's kind of like two different worlds. Is the world where this data was in, where things were at least more normal, and then this world that we're in right now, where it's changing, so quickly. So this week, the housing data will be interesting, but it's not going to totally reflect what the current circumstances are. I'll tell you one thing that we'll be watching closely is initial jobless claims this Thursday. We saw 2 weeks ago initial jobless claims were 210,000 people filing for unemployment benefits for the first time. Now last week, it jumped to 280,000. Quite a significant jump, but still pretty reasonably good levels. Get ready for the shocker. It could go over 2 million and just overwhelm the system. Now that creates a whole host of problems, but I want to put it in a little perspective for you. During the worst of the financial crisis, the Great Recession that we had, Lehman Brothers, just all this awful stuff that was going on, the housing meltdown, 600,000 initial jobless claims. We could be 3 or 4 times that amount. And in a short period of time, it just overwhelms the system. And that means poor individuals that are out of work, that don't have income coming in, will be in a position where they are looking to get unemployment benefits, but that could be a little bit difficult and challenging as well, just due to the fact that the system might be overwhelmed. And this is all at a time when things are trying to be done with social distancing. So let's face it, you're going to be less efficient if less people are coming in, or you're trying to figure out some way to do this electronically or keeping people at home. It's not going to be an easy time, certainly. And this is a good time for us to just remember patience and remember that the good news about this is that there is going to be light at the end of the tunnel. Things will get better. Now, they might get worse initially. They probably will, but they will get better. Now, from the business standpoint, and it's almost insensitive to talk about the business standpoint, but there are questions that you need to be answering for your clients out there. So let's talk about what is going on in this marketplace and why in the world would rates be heading higher. Your customers are frustrated because they hear last week that the Fed cut rates by 1% to 0. So I want a 0% mortgage, right? And here you're watching mortgage rates go up by 1%. So the first thing to clarify is that mortgage rates and the Fed are two totally different things. A mortgage rate could be out there for 30 years. The Fed, that's a rate that banks borrow from each other overnight, one day. So if you were a little bit low on that and you've got to adjust it, you can literally adjust it the next day. If you put out a mortgage rate out there, well, then the mortgage rate could be out there for 30 years being too low. So that risk has to be adjusted differently. They're two totally different things. If your client were lending the money, they may be a little bit less concerned if they were lending it what the rate might be for a day, as opposed to what they'd be stuck with for 30 years. I'm sure that they can understand that. Now, here's the other thing. Why'd they go up anyway? So we know they're different, but why'd they go up? Two very important reasons. And reason number one is that a lot of the things that we are talking about here in this crisis, and I talked about unemployment claims first, is that people are going to be out of work. Now, businesses are closing, as you know. That means there's no income coming in or very little income coming in. And when we take a look at the big picture here and we say, okay, so if no money is going to be coming in, how are you going to pay your workers? And maybe it might be nice and pay them for a short period of time, but eventually that's going to stop. And people are going to need to get some relief here. Businesses will need some relief. And the government is trying to put a package together or working on a package, or there will be something out there that's in the works now, but the details, I'm sure you'll be learning about them as to what they will, what individuals may receive depending on income, what businesses might receive, who's going to get a bailout. All these things will be very important, except that it takes a lot of money to do this. It's in the trillions of dollars. So as the government, which doesn't have any money, comes up with this money, they have to borrow it. How do they borrow it? They sell treasuries. Now, when they sell treasuries, that means that there's more supply of this on the marketplace, which can normally be absorbed over time. But the shock of this in one big dose, or several doses, but in a short period of time that the market is unprepared to absorb, how do you get the market to take this paper? Well, you have to incent the market with a higher interest rate for a higher reward to get them to come out and invest in this. Well, as buyers do this and get a higher rate on treasuries, that's going to, and that has already started to pull mortgage rates higher. And there's one more thing. Our Treasury Secretary, Steven Mnuchin, said that he fears that if we don't come up with a big package, if this thing persists, we could see unemployment reach, and he said this number, 20%. Now, let me explain in context once again. During the depths of the financial recession that we had, worst recession that we could all remember, housing bubble again, financial crisis, meltdown in the financial markets and mortgage market, unemployment reached 10%. So 20% is double that. The Great Depression had unemployment between 20 and 25%. So what that means is that the financial markets, the mortgage market, now has to price in a new risk, a risk of what if people don't pay their mortgage. And anytime there's increased risk, you have to give an investor increased reward. So all of these things at the present time are causing some confusion in the market and causing mortgage rates to rise. A longer term, will this settle down? Yes, it will. Will there be opportunities? Of course there will. Will our housing market take a bit of a hit? Yes, it will. But it's a very strong market, the housing market. There are more buyers than sellers. It's just that right now, we're not as excited about going into a home that potentially be infected or allowing others to look at our home for sale who may bring infection in. So this is a challenging time. But God willing, we get through this. We're able to move forward with some of the medications that are out there. We keep the social distancing. We keep this to lower levels. And we come out of this in the not too distant future, and this market will come back. The housing market will be strong and will come back. There are more buyers than sellers. Interest rates will settle back down once we get our arms around this, so there will be opportunity. In the interim, what you might want to consider is taking advantage of the equity in your home by using debt consolidation tools. Restructure your debt so you reduce your monthly payment dramatically, or accelerate the payments on your mortgage so that you can build a wonderful retirement plan for yourself or a way to save for the future. These are all important steps in the long haul, and I know that when we're looking at an acute situation like we have right now, it's hard to look long-term what decisions to make, but that's a good way to take a step back sometimes and plan for the future at these times specifically. I know it's hard to do. I know you're trying to hang in there. I promise you that this is going to get better over time. It's just a time for us to be patient, a time for us to be kind, and a time for us to help each other the best we can. I hope you guys have a wonderful week, and I'll talk to you soon. Bye-bye.
PRMG continues to provide our wholesale partners across the nation with better technology, better product, better pricing, and better service. Our nationally recognized brand is more than just an image. It is a symbol of integrity. PRMG, built by originators for originators. Be sure to click on the link below for your free 30-day MBS Highway trial.
This is Mortgage News Network.